This is the Euro Yen and we're on the 15. We have a triangle that's set up. I'm going to go ahead here and do the high time frame analysis. So let's go out to the dailies and take a look at what's been happening. So we do have a new low here, so I'm going to put a structure level on at the lowest point, the most recent lowest point, and we do have a break below, close below. Let's go to the 240. And I'm just going to go ahead here and highlight these wicks just here. So you can see here on the 240 we've still got this break below, close below these two levels and this level as well, so we're seeing a pullback right now into the wicks. Let's go to the 60. Not a great deal here. There was a gap over the weekend which doesn't make this look very pretty, but let's go to the 15. And here on the 15 I'm just going to draw in a line where this candle should be. This should be a big red candle, and what we've then done is this made a new low, a pullback, a new low, and then as we pulled back we actually violated this level here on the 15, but we are still up in the wicks as you can see here, so we haven't violated the wicks in any way, so this is still a valid opportunity to look to get short. And with these patterns I only play for a 127 fib, but the rules for this triangle are we're majority of the time looking for a sore thumb move like this. We're looking for a directional pole, and then if we draw out the channel by having it on the closes of the candles, just like that, and then we do the same for up here on the closes of the candles. We're looking for confirmation that the market is wedging, and what I mean by that is the third test cannot touch the closes of the candles on the first test, and as you can see that has not happened, and it's also not happened up here. On this test has not retested the closes of the candles, so a clear sign here that we're wedging and we should be looking for some sort of breakout pattern. So we need minimum of 4 touches, 1, 2, 3, 4. Typically on these patterns we do get 6 touches. I'm only just doing my review, so I haven't got the absolute best entry, but nevertheless you can see we've come up to this trend line and held it. If we bring back on the orders, then I've gone an ATR behind the highest point here, which is 6 pips. And I'm then looking for that 127 extension. Even though we have confirmation that we can come lower, it's very rare that I go ahead and take extended targets on these patterns, and that's just because when we hit that 127, majority of the time we do see a retracement and a reaction the other way, and it's just not profitable enough for me to play for extensions. So looking at around 18 pips of risk here, and I am front running by a couple of pips for around 38, so a lovely 2-to-1 reward to risk here. And we're back for the last update on this trade, and I was stopped out of this trade, but I've held off doing this video because I thought to myself, well, this could be a fake break to the upside. In the end it wasn't what I would class as a fake break, but what I wanted to do was just talk through how the trade has actually gone on to hit the projected targets. All that happened in this instance is we had a rally which stopped us out, and then it reversed, and we did carry on in the direction excuse me, that I thought we were going to go. And you know, that's what trading is. We're looking for those areas where we think we're going to see a reaction, and sometimes it's a case of if we find an area where we're going to see a reaction, we have a good place to put stops behind, we have potential target projections, then we have a valid trading opportunity. Just in this instance, unfortunately, we were stopped out. I did go 5 pips above the high. That's my normal stop loss for a pattern this size on this time frame. But we did actually spike up 10 pips. I would not have had my stop that high. Let's just go and take a quick look at the 60, see what happened. Yeah, if you look at the 60, you can see we did actually hold that structure level. We just simply spiked up and then it was followed by the lower low, lower close. But you know, we picked the right turning spot. It just wasn't meant to be.